What's up, y'all? Welcome back to my channel. First off, I just want to say I appreciate everybody that's been watching the videos, leaving comments, hitting the like button, sharing, subscribing, and supporting the channel in general. We only about a month into this journey, and every single video, I'm just trying to get better than my last one. If there's ever a topic y'all want me to cover, or maybe there's something I can explain a little better, leave it down in the comments below because I actually will read every single comment and react to it. I want this channel to grow with y'all, so continue this journey with me. I just appreciate y'all from the bottom of my heart for supporting me, and let's just keep this thing rolling. So prior to me even getting into any type of chart examples, you'll know what I do. I like to give you guys an understanding using PDFs, and then we're gonna get into some actual live chart examples. So let's get into it. So today's video is gonna be on AMD, also known as Power3, but I'm gonna approach it a little differently than most people. I don't want you leaving this video just knowing what AMD stands for. I want y'all to actually understand how to see it. Because I think one of the biggest mistakes traders make is looking at candles as just an up close candle or a down close candle. Instead, understanding how was this candle created. Because a lot of times y'all just see the open high, low close. Oh, it's bullish. Maybe I should buy. Hey, it's bearish. Maybe I should sell. That's not the approach you want to have to the markets. You want to actually understand how did this higher time frame candle form. So that's the question I'm going to answer for y'all today. How does it form? I want y'all to understand that every candle has a story. It didn't just appear on the chart. Before that candle closed, price had to move. Liquidity had to be built. Liquidity had to get taken. And then price had to deliver. That's where AMD comes into play. So what does AMD stands for? And what is Power 3? So Power 3 is AMD. These are the three phases of price delivery in the market. It's either moving sideways, it's either moving up, or it's moving down. And in that process, when price is moving sideways, it usually will manipulate one end of that range, of the accumulation range, and then it will distribute to the opposite side of that range. So as we can see here, price consolidates in a tight range. Liquidity is built above highs and lows. Market participants take positions, and this is how the market builds liquidity. After that, you have your manipulation phase. Price expands outside the range. Liquidity above or below the range is swept. It creates a false breakout to trap participants, because many times people will see a breakout move and they're ready to buy. They got their stop losses below the range and likely to get stopped out after price then went inside their favor. And then you have distribution, which is the last phase of the Power 3, where price is delivering in the opposite direction of manipulation, and then a strong directional move away from the range. And it targets the opposite end of the range and then whatever other liquidity that is there. This is market delivery of liquidity. So you got price going from external range liquidity to internal range liquidity, so on and so forth. So instead of giving y'all just a definition of AMD, I'm going to break it down from a higher time frame candle. Then we're going to open the candle up on the lower time frame so you can actually watch accumulation, manipulation, and distribution happen in real time. But before we do that, I'm going to show you guys how the process works just using this PDF. So we can see here that this is the open of a candle and price had created its low. Usually when a candle closes, a new candle forms and it has its open, which price will accumulate at. So here, this is where price had opened. Usually the previous candle is accumulating once it closed because price has to have an open, a low, a high, and a close. Once a candle closes, it's creating a high, it's distributing lower, and it's accumulating. So when a new candle open, it can open, create its low, create its high, and close again. So as you can see here, price accumulated prior to price opening this new candle. Once this candle opened, it created a low, taking out liquidity below the accumulation phase, broke back inside the range. So this last down close candle that came and swept liquidity, price closed back above it. So now this downtrend turned into an uptrend, and now it's time for price to deliver to the opposite end of the range and whatever targets price wants to go. That is called your distribution phase. So by the end of this video, I want you to stop looking at just candles as individual bars and start looking at them as stories, because once you understand the story, the charts start making a whole lot of more sense. Let me get you guys over to the real charts. Let me give you guys some examples of an AMD and how you can use it from a higher time frame candle, breaking it down and dissecting it into a lower time frame candle, as you guys can see in this example here. So let's get into it. So in this next example, I'm gonna go using this weekly time frame. We can see that we have a weekly candle here. The open is here, the low here, took out the previous week low, and then you can see that It ended up being an up close candle after creating a high and then closing bullish. So what we're going to do is we're going to go down to our 4-hour time frame and see how did this candle develop. We're just going to dissect it. So let's get into that. So on this lower time frame on a 4-hour, we can see that price had traded down to the downside and then it started pulling back. Once a candle closed and the new candle is forming, price will use this previous candle range as liquidity to go sweep it and then go into the opposite direction. So what I mean by that is we can see that we went down last week. We have a down close candle, and towards the end of the week, price started making its way back up because price usually do this. You have an open, price creates a high, price creates a low, and then it pulls back to have its close. So that's typically what you basically seeing once you see this higher time frame candles are forming, or using a line to basically show you guys what it actually looks like. So you always get that pullback at the end of a candle, which gives you its wick. So if I go back to my weekly chart, you guys can see that this was the wick of the previous weekly candle because it opened high, came all the way down, and then price pulled back. That pullback is just this move here as price is pulling back inside the range before the week ended. So now going into this new week, what we want to see is we want to see price basically come down, collect liquidity, use this these previous days of the last weekly candle as accumulation, manipulate that accumulation, and then we want to look for our distribution phase. So what I'm going to do here is I'm going to separate price based off of the last couple weekly candles, and then we want to see how this plays out on this 4-hour time frame. So this candle is forming. So now you got prices moving down, and it swept the previous week's low. We could basically say that this was our accumulation phase because price used this low as accumulation and then broke back inside the range. So we have our accumulation here, we have our potential manipulation here, and the only way we know that this is actually manipulation is if we close back inside the range and then break structure to the upside, showing us that price wants to continue higher and go into a distribution phase. So you won't just enter the market just because you think that price is going higher or you think price is going lower. Now that we swept lows or highs, we need confirmation to show that price actually wants to do that. So as we can see here, so if we go to our line chart, we can actually see this is the last high that price created. Once price closed above this high, that's considered your change in state of delivery, which we can see here. And now we can look for price to continue to the upside and go into a distribution phase. So as you can see, price started making its way higher, and this will be considered your distribution phase. You can target the opposite end of the accumulation range or any higher time frame targets that you see within this candle's range. So you have this high to low. If you guys don't know what premium and discount is, you can go check out my previous video. I went over premium and discount. You can use this along with AMD to know where to target in the market and make sure you're on the right side of the market. So we can see here that we can look for buys using this accumulation, manipulation, and distribution formation to target back inside a premium market because price is sitting in this discount. We know that price is too low. We want to see price distribute higher and go at least to 50% into a premium. As we can see here, price had traded using this accumulation, manipulation, and distribution phases, and understanding why price wanted to go to this premium market just by drawing out your current range from the high to low. You can see that price had took out these lows, creating a new swing low. Accumulation, manipulation, and then distribution happened after price took out these lows. This is why I told you guys that you want to build a story. You don't want to just trade patterns. You don't just want to trade a candle just because it's bullish. You want to actually dissect that candle and understand why this candle did what it did. In this next example, using MES on the 7-hour time frame, we can see that price is currently inside this tight range. You do have price coming up, sweeping this swing high, but then price just closes back inside the range and it's just sitting here. So many traders will look at this like, man, price ain't doing nothing. However, but I look at it differently. I think the market is getting ready because every time price keeps bouncing around, liquidity is starting to build. Buyers are getting comfortable, sellers are getting comfortable, and stops are stacking above highs, stops are stacking below lows. This is what I consider accumulation. not because the market is doing nothing, but because it's preparing for what's next. So just because we have this range here and price isn't doing anything doesn't mean that we can't participate into this market. But the most important thing is we have to understand that we're just inside accumulation phase. And now we're just waiting for price to give us the manipulation to continue to either to the downside or to go to the upside. So we're either going to continue higher or we're going to reverse from this level after taking liquidity and then go back down to the downside. So what we're going to do is we're going to go down to our 15-minute time frame here. And we're going to see how this plays out once this candle opens. So literally you can see on this 15-minute time frame that price just went up, came back down, and went up, came back down, and it's just moving sideways. Just understand that every time price is respecting this range, more liquidity is being created. You got to think of it like it's a pressure building inside a balloon. Eventually something has to happen and the balloon is going to pop, right? So what we're going to see here is watch how price react once we open. You can see that price went back up into the range, and now we took out the buyers in the market first, or we took out the sellers and the buyers in the market first. Reason being is you have breakout traders looking to continue this higher. Yes, price is in their favor. And then you have sellers that's thinking that price can sell at these highs using support and resistance or using supply and demand. And then we can see that price starts to reverse, make its way back inside the range. And all those traders that thought this was a breakout trade is in trouble pretty much, because most likely that they have entry here and they probably have their stop sitting below this level here and they're looking to target somewhere up here. I don't know where, whatever they're the way they trade, wherever they put their targets at. Nonetheless, we understand that price went up and took out this liquidity first and broke back inside the range. This is showing me that this is possibly a manipulation phase. So we're going to mark this up as a manipulation because price had came above this range, closed below these last up close candles. This is important because once price closed back inside this range and closed below the last up close candles that took out the liquidity, this is showing me that price has shifted from a bullish trend to a bearish trend. And it could be short term, it does not matter. This is just showing me that based off of this current range, price doesn't want to continue this uptrend. It's just coming here to seek liquidity, stop out the buyers that's trying to get the breakout. And that's exactly what most traders is going to think, that this is a breakout. Or instead of asking, is this the breakout? You should ask yourself, what did price just accomplish here? It just took out highs, closed back inside the range. Now that price just reached liquidity, that's the important part. Whether it swept the highs or it swept the lows, the market collected orders before making its next decision. So after we collect these orders, we just want to see if price is going to continue lower. We expect it to continue lower because we just closed below the last up close candles. So we understand that we're in manipulation phase, and it's likely that now we're going through a distribution phase now that price had closed below this up close candle. You can see here, this is how the 7-hour candle is forming. You have the open here, price goes up, take out accumulation, creates the wick, close back into the range, change stay in delivery. Now price is literally closing below the open of the market, and you can see prices just displacing lower and lower, and that will be your distribution phase. This is why I don't look at wicks as just random rejections. You have to understand that wicks is actually telling a story. They show me where price went, what it collected, and where it failed to stay. It showed us that this isn't a breakout move. It showed us that buyers are no longer in the market based off of this current situation. We just accumulated, we need a manipulation, and then we distributed to the downside during this 7-hour candle. The same process happens on every time frame. Market is fractal. A daily candle can be opened up with a 1 hour, a 4-hour candle can be opened up with a 15-minute, a 1-hour candle can be opened up with a 5-minute. The story never changes, you're just zooming in. So you're just taking this one higher time frame candle, breaking it down, looking for an entry to understand when was this higher time frame wick created, when did price manipulate price. So you have to understand that the only thing that you're really doing is you're looking to be inside this market at the open to its low. If you want to see price go up here and collect liquidity, all you're doing is looking to see, when did this price create the wick? When did price manipulate the market? Can I be a part of this next formation here? You can look at these candles as simple as this. This candle here was literally your accumulation candle. This one down close candle here, you can see that the next candle came down, swept it, and closed back into the range. Oh wow, look, that could be my manipulation. So I wonder what this next daily candle is going to do. Let's see. Oh wow, it distributed higher. So now you can see the three different phases. We have an accumulation phase, a manipulation phase, and a distribution phase based off of these three candles. Now you don't want to pattern trade. You don't want to look at it as a pattern, but you want to look at it as, okay, cool. I know that accumulation happened. I know that manipulation happened. Maybe I can be a part of this next third candle here. Get in here by the open to the wick of the low, and then try to trade it to the opposite end of the range. And that's how you use AMD to your advantage, whether it's one singular candle or you're using actual three candles. I can use this one candle as my accumulation, this one candle as my manipulation, and that candle as my distribution. So now that I show you guys multiple examples, this is where my personal model comes into play. I don't just wake up looking for AMD. I start with the higher time frame. I ask, where is this candle trying to go? Is it reaching for external liquidity? Is it reaching for internal liquidity? Once I understand the objective, then I drop down. Now I'm asking, are we accumulating? Did manipulation already happen? Are we beginning distribution? And once all that lines up, that's when I start looking for my confirmations like SMT, change in state of delivery, everything else that we've been talking about. So in this last chart example, I can give you guys my actual trade model and what I do using AMD. So what I do here is, for one, I like to come into the market around 9:45. I want to see how the previous 4-hour candles has formed, where the market direction is trying to go. So if I'm looking at this, I want to mark up my last few 4-hour candles. Here I can see this was Asia sessions range pretty much at 2 a.m. This was a London session range here at 6 a.m. And now I'm looking to catch this third candle here during New York session. So you know we have 3 sessions typically, is your Asia, your London, and your New York session. So being as though I understand that, I want to look at these candles and I want to say, okay, what has price showed me already? Has liquidity been taken? Did we accumulate? Has liquidity been taken? Are we ready to distribute? Just looking at these candles here, I can see that London session at 6 a.m. came down, took out this 2 a.m. range, closing back into the range, and now I can look for a distribution phase. Why do I say that? Because literally, if I go down to my 15-minute time frame, I can see this even more clear. I can see that this was that 2 a.m. range here. And typically, Asia session is your tight range. When you're using indices, you want to see price pretty much be in a tight consolidating range, accumulation range during that Asia session. That's what we got here. Price wasn't really giving us much direction. And we can see here during London session, price had came up after opening, taking out the high, taking out the low of Asia session, and then closing back above close to the highs. So to me, I'm looking at that like, okay, cool. So we took out liquidity here. Price is already showing me that it wants to go higher based off the higher time frame. I just need to see what phase we are in. After pulling back here, we created accumulation, manipulation, and now I'm looking for the distribution phase coming into 10 o'clock. I can see that this last down close candle that took out liquidity is being broken above. I like to enter my trades during the macro time, which is the first 15 minutes and the last 15 minutes of an hour. Here, this shows me that price wants to go higher because we closed above that last down close candle. So I'll be looking to get into this market right here, and I'm just looking for a 1 to 2. So once this 10 o'clock candle open, I'm just looking to see if price is going to respect my bias. So I expect price to distribute higher. Let's press play and let's see how this plays out. As we can see, the 10 o'clock candle open, it comes back down because it has to go through its phases of accumulating, manipulating, and distributing in this candle alone. And as we can see, price is taking its time to get there, but eventually it starts to get there and it hits my target. So if you take one thing away from this video, let it be this, that every candle tells a story. Stop looking at candles as just up close candles and down close candles. Start asking yourself, what story is this candle telling me? Every higher time frame candle is built one step at a time. And when you learn to read that story, you stop chasing moves and you start understanding them. So a recap for you guys. It's always understand that price has an open, a low, a high, and a close, and within that one candle, price can be dissected on a lower time frame into an AMD formation called accumulation, manipulation, and distribution. And that accumulation is where market is building liquidity, and manipulation is where market is taking liquidity. And your third phase, the market delivers liquidity after manipulating from one end of the range going into the opposite end of the range. I appreciate y'all for rocking with me. If this video gave you a different perspective on AMD, let me know down in the comments what clicked for you. In the next video, we're going to be building on this and breaking down macro windows, because understanding how price move is one thing, but understanding when it's most likely to move is what ties it all together. Until next time, keep studying, keep improving, and I'll catch y'all on the next one. It's your boy AP Reese, and I'm out.